Hey everyone, this is Mark from Stocks and Cash. It's January 31st, 2018, and I'm here to give you my market update, go over my holdings, and give you some potential trade setups for tomorrow. Let's jump right into the SPY. The SPY had kind of a doji-ish candle, an indecision type candle. We kind of opened higher than yesterday's close, came down and tested new lows compared to yesterday. And then we kind of rallied and closed around the same spot as yesterday's close. So not a whole lot of information on where this market could go. You can see that the 62% retracement lines up nicely with the 21 EMA, so I'd be happy with a pullback to that level and then continuation forward. You can see the Stokes have turned bearish. The RSI is kind of hanging out in the close to the overbought territory, and MACD has just barely crossed bearishly. So, I wouldn't be in a panic or anything at this point in time. I do think we'll resume the bullish trend at some point, but we did close below the 8 EMA. It would be nice to get a little more of a pullback here. We could maybe see some more consolidation, but ultimately I do think in the coming weeks we'll start going higher again. We just kind of have to shake out what the market's trying to do now. If it's just trying to rest, maybe pull back a little bit more, but I do think there's some more unknowns before we do hopefully ultimately take off bullishly. Looking at the Qs, Qs had a slightly better day than the SPY in that it closed above yesterday's close. Both days closed above the 8 EMA, which is a positive thing, but the candles, the doji indecision candles are not the most positive candles. They're indecision, so we may consolidate a little bit more. Maybe we pull back to the 21 EMA at some point, but I do think we need a rest. Stokes and RSI is still pretty much overbought. MACD is almost crossing bearishly, but hasn't yet. So, I'd expect a little more consolidation, maybe some pullback here to the 21 EMA, but that's just my guess. Let's take a look at my holdings. Really disappointed in DuPont and Dunkin'. I closed my Dunkin' position. I'll show you why when I get to it. We closed below a price level, and I just thought it was time to end the pain and get out. DuPont I am still in, being a little stubborn, but I'm hoping for some support at the 21 EMA. I have about $1 of risk left in that one. Closed eBay for a 2% gain, which isn't awful since I was down I was down I think 9 yesterday, so I made that back. Closed out in the green. It had its earnings at the end of today, and part of my trade plan is not being in when earnings takes place. Seagate had a very small gain today. Had a very ugly gravestone candle, which I'll show you in a bit. CVX I closed out on. I had on the 5-minute. We closed below the 55 EMA. I was happy with that result, so I closed my position. And I did end up opening some FedEx puts, and I'll show you that chart on the 5-minute when I get into that. So let's take a look at DE. Excuse me. So DE had a pretty ugly down day, closed below the close of yesterday. As I mentioned, there is the 21 EMA here that's acting as support. As is the 62% retracement level, kind of are about in the same area here. Now, Stokes are bearish, MACD is bearish, and so is RSI, so I'm a little concerned about this trade. My stop is a few cents below the 21 EMA, so we'll see if we bounce and rally or if we continue lower, but right now I'm a little bit worried about this trade. Dunkin', like I said, really disappointed in this trade. We had the big gap down on the 29th, and then we've just kind of continued on with this pattern of declining. We closed below the low of this candle here. We closed below the 8 and the 21 EMA, so I thought I had enough pain on this particular play You know, maybe it'll rally, maybe it won't, but you know, it could keep on going down. But I am not a fan of this position any longer, so I am out of that. The next stock, bear with me for a second. eBay, as I said, I closed out somewhere up around here. I saw I had some green on my overall trade, so I decided to get out. And like I said, earnings was at the end of the day, so I didn't want to be in that any longer. Seagate, again, as I said, had a gravestone candle today. It was looking nice earlier in the day, but it couldn't hold its gains, and it kind of retraced. So a little leery of where we're at here with Seagate. Stop is the low of or the breakout level, which is 54.1. We're at 55.2, so I have about $1 risk, you know, before I get out of the trade. And it does still have the 8 EMA as support, so I'm not completely, you know, worried, but certainly I would have liked a different or more strong candle today. Stokes are still overbought, RSI still overbought, MACD is trying to cross over bearish, hasn't done so yet, so there is still some life left in Seagate to potentially move higher if the overall market decides to join it. CVX, as I mentioned, I did close out. Like I said, we had a few closes below the 55 EMA. Just from experience, I was worried about it kind of rebounding, especially with the 32% here, so I closed out on my position. CVX is still very bearish, but this doji candle could represent a reversal potentially. I just didn't feel comfortable being in any longer. I was happy to take a profit and get out. FedEx had a down day, a shooting star-ish type candle. We touched the 8 EMA and then ultimately closed below the 21 EMA, but closed above yesterday's close. So I was a little disappointed about that. As I said, I'll show you when I get in on the 5-minute here. So today's open was here, the 9:30 candle. You can see we never closed below it until later in the day on this particular candle here at 2:20. We did continue on down a little bit, but then bounced a bit at the end of the day, and then came back down again. So I was hoping this downtrend would have continued. It didn't. So I'm a little bit worried about FedEx being bearish if the market rallies tomorrow. If it doesn't, I could see some more downside to it. But we'll have to wait and see what tomorrow brings. As for a stop, you know, it's tough. I'm kind of in no man's land in a sense because we went so high up here. You know, that's, let's see, 67 and we closed at 62. I mean, $5 is way too much in my mind to risk. So maybe at 264, that's about a $2 risk at the 21 EMA. You know, I might set my stop. So we'll see what FedEx does tomorrow. Now for a couple of trade setups. Let's look at Best Buy. Its earnings are at the end of the month. We closed below the 21 EMA and the 8 EMA, obviously. Everything is looking bearish here. I think on the 5-minute rule, if we close below the low of the first 5-minute candle, it would be a worthwhile trade bearish. I think we could get down to the 55 EMA as support, maybe even this 100% retracement, but 55 is probably a best bet, which is 67.99. We're currently at 73.06. So, you know, you could risk maybe, you know, up to the 21 EMA, which is 73, all the way down to 68, basically, is about a $5 gain for, you know, about a dollar or so, you know, maybe even less than that risk. So I do like this potential trade setup, assuming that the market cooperates and goes further down tomorrow. IWM, I was long on it, but for the same reason as Best Buy, we've closed below the 8 EMA and the 21 EMA. I do believe we could continue lower. now that we're below those levels. Again, the Stokes, MACD, and the RSI are all pointing bearishly, so I think there's some opportunity here to continue lower, at least test the 55 EMA, which is at 153, so about $2 or $3 to get down there, with only about $1 to 50 cents or so of risk, is what I'd be looking at. MasterCard has been on a pretty nice tear here. It had a little pullback to the 8 EMA, had a nice strong candle today on high volume. I truthfully didn't look at earnings, so assuming earnings isn't in the next week or so, if we close above this 170.7 breakout level, I could see it potentially going higher to 176 and 183. So a whole lot of room to run on MasterCard if it wants to continue its uptrend. The Stokes are still kind of overbought, as is the RSI. It would be a small position if I were to get in. If we do close above this level, I would definitely be a little cautious, but I do see some potential for it to run. Let's see. Tiffany's, for the same reason as IWM and Best Buy, broke below the 8 and the 21 EMA today. All indicators are bearish. Not too much to say here. You could watch it on the 5-minute rule and decide if you want to get in when we get a close below the low of the first 5-minute candle. I think a potential target to the 55 EMA, 102.72. You get about a $4 gain there from where we currently have closed at. So some potential opportunity there in Tiffany's. COG I really like as a short. You can see a very clear textbook double top here, and we close below the neckline of that double top. So I really do think we have an opportunity to go lower. This support level I drew coming all the way back to 2016. You see it touched here, and here. Not saying that we will touch it, but it's in the vicinity to potentially act as support. So probably want to keep an eye on that level. But for a target, I see a first target of 25.64, second target of 24.58. So I definitely see some room for COG to kind of go down. Maybe get to this 161 extension. MACD is very bearish. The Stokes are oversold, and RSI is kind of in a getting towards an oversold state. So, no guarantees that it's going to come all the way down here, but we do have potential to hit this first target and maybe even the second one. But the indicators are showing some tiredness, I guess, although we have gone lower, as you can see back here in October of 16. MACD can go lower than what it's at right now, so definitely still some potential to go down on COG. And last but not least is Tesla, everyone's favorite stock. Tesla had a nice strong bullish candle. I'm back to a bullish sentiment on Tesla. If you're not in the trade, it's really tough because of how expensive Tesla is and how volatile the stock is. Usually makes big moves. Even if it's a doji, you have kind of a wick on either side or a long wick. You can see here. You don't usually get trades in one direction. Usually there's some wicks there. But if you're comfortable trading Tesla, I think we are bullish. You can see MACD's turned back up. Stochastics have turned up, and RSI is pointing upward as well. I would still be cautious if we hit our first target of 360. You might want to trim some of your gains. But assuming we hit this target and then push through, get a close above it, 376 I don't think is out of the realm of possibility. So I do like Tesla right now. Again, it's not something I will get in. It's a little too expensive for what I'm trading right now, but you know, we saw that we had a bounce off the 21 EMA, meandered a little bit, and now we've come back into our breakout levels and have a chance to go higher. So I do think Tesla is a decent bullish play if you're not in it. 5-minute rule and see what you can get out of it, and stop below the low of that first 5-minute candle to protect your trade. That concludes my video tonight. If anyone has any questions or comments, please feel free to leave them. Look forward to hearing from you, and thanks for watching.